Now, when one thinks of poverty alleviation, because it's really a concept that's bandied about extensively in a country like South Africa, we think of NGOs, we think of government welfare. What does it mean that we can now look to the market for the solutions?
First, thanks very much for having me, and I think it's an exciting area of development where the conversation on development has really moved past just this idea of that it's all in the hand of aid agencies or it's all in the hand of governments. That in the last, historically, people have thought of the private sector as an engine of job creation, which is quite important. I think what we see with market-based solutions is you can take it one step further, which is there are market-based approaches that can deliver real needed products and services ranging from clean drinking water, healthcare, education, to real income increases through engagement in productive schemes in agriculture and other sectors. And so we did this work based on looking at 440 different businesses across Africa and 9 countries to look at that alternatives as to what actually works.
I mean, the main idea here is to engage the poor as customers, I'm quoting. Now, how does that work on a continent where just about 50% of the people live on about $2 a day?
Right. Well, it works in a couple of different ways. So some companies have been very successful engaging the poor as customers by coming in with a superior product. The poor are active in markets every day. But the problem typically is they're buying informal products with low quality that are too expensive and high cost and sometimes even life endangering. So the idea is when market-based solutions come in like Voltic did, which is Ghana's #1 bottled water manufacturer, and came in and introduced low-cost water sachets, 500 milliliters, 3.5 US cents, a high-quality branded product that can really make a difference that was affordable to the poor. We've seen that again in mobile phone services, where the mobile carriers have been very successful. M-Pesa in Kenya has 8 million customers for money transfer, which replaces insecure, expensive transferring money back to the village on a bus.
Right. How do we ensure that that doesn't lead to market distortions? Because already you're seeing with the fears of global food inflation creeping through, some governments are going back to zero-rated tax on basic goods, removing VAT subsidies on basic foods. So, for it to work effectively, you do need a mix of market solutions, but also government interventions like subsidies, because effectively the service provider would be working on low margins if we worked purely on market principles.
Yes, so we've actually seen both work, and we've seen companies make a go of it in terms of serving the poor and engaging them in supply chain. So for instance, in Uganda there's a group, Afrokai, which sources from 5,000 smallholder sorghum farmers and sells into Nile breweries and SAB, an SAB affiliate. And they're making a go of it without any subsidy. They're making work on commercial transactions to get their supply chain going. So there are models that actually work quite well without subsidy. But one of the things we've noticed, both in India and in Africa, is that there is a role for smart subsidies to play a role in terms of helping, for instance, to do demand stimulation, to help educate consumers about what's required. One of the most successful market-based solutions is microfinance. IFC and other institutions that provide a lot of support to microfinance around the world and in Africa. Microfinance started with years of grant funding before it became commercially financed and commercially sustainable. So we see a need for a mix of both to get these markets off the ground, prove out the business model so that they can work.
Again, with the microfinance issue, and I remember us interviewing the founder of the Grameen Bank, and the question was, how do the poor pay back a loan when often you're giving them a loan to dabble in a business endeavor that may or may not succeed? Most of them don't have steady sources of income.
Yes, but this gets back to the point that the poor are in markets every day. In a lot of cases, they're borrowing from informal money lenders at 3 or 4 times the cost of what they're borrowing from your average microfinance. So the rate may look high, but in fact, compared to their alternatives out there, where they don't usually have access to formal credit, they're actually succeeding in getting a much lower cost of credit. And most of the poor are finding a way to make an income somehow through casual labor, through other means, and in fact find ways to pay back their credit. Repayment rates in microfinance are excellent, as I'm sure you recall from Dr. Yunus, but the real, and that's the real power, is the poor are economic actors who make rational decisions, and if you give them some capital or some training. We've seen here in South Africa, the enormous power to increase incomes by over 100%. The South African government has been training unemployed high school graduates to get into the business process outsourcing sector quite successfully.
It's important for us to draw a distinction between rural poverty and urban poverty, and I want us to start with urban poverty because the urban poor have to face all sorts of costs to their living. It's a rental, it's a transport cost, it's to buy food, all sorts of things like that. And within this insecurity of not having a stable, steady income, it makes the situation a lot more vulnerable. Does the approach differ in the cities?
Well, certainly yes. Your solutions in urban areas can be quite different. The costs of serving a dense urban area like a township or a slum are quite different from your cost of serving a dispersed rural area. This is one of the big differences between Africa and India, where rural areas are much denser. So, in fact, there are certain services and models that work quite well in urban areas that don't work as well in rural areas, and vice versa. We've seen very successful rural water village kiosks that can sell for 2.5, 3 US cents for a 20-liter bottle that work terrifically in rural areas, but because of regulatory pressures are much harder to work in urban areas. And similarly, in urban areas, we've seen companies really making a go of it in terms of other services that are much lower cost to deliver because the transport costs are just less.
Obviously, we know within rural areas we've got a lot of small-scale subsistence farmers across the spectrum in Africa. What's the approach to their existence, because they've got to produce the good, albeit in low volumes. They've got to access the market in one way or another. Where do they fit in the supply chain?
Yeah, so we've seen some very exciting things in this area in Africa, where Africa is actually leading in some cases. We've seen 3 different business models that work. I'll talk about one, contract farming, which is run by a group in Kenya called Frigo-Ken, which is engaged. They have 60,000 smallholder farmers engaged in the horticulture value chain, selling and exporting green beans, and they provide a fully integrated, they provide the inputs, they provide the credit, they provide the training to the farmers, and then they provide a guaranteed market for those farmers. So these solutions like that, there's a group in Ghana, Savannah Farmers Marketing Company, that trades in soybeans for the domestic market quite successfully. So companies are beginning to figure out how to put this into their supply chain and increase incomes anywhere between 30 and 125% for those farmers who participate.
Personally, I need those soybeans. I'm lactose intolerant. Okay, market-based solutions, the role of government, philanthropists and NGOs. Are we saying that we're eventually moving to a place where we don't really need them?
Well, it's going to be a long time till we get there. And in fact, the conversation around government is typically always around regulatory. And in fact, some of the best market-based solutions we've seen have had government playing a very catalytic, active role as either an anchor buyer, for instance, for school feeding programs, or as as supporting training costs to get low-income workers into schemes. So we think this is a nice complementary approach. It doesn't replace what government needs to do. It doesn't replace what aid needs to be done. But if aid is spent smartly, it can actually catalyze a lot of private investment into these markets.
All right, and very finally, you're operating in 9 African countries: Ghana, Kenya, Tanzania, Senegal, Uganda, South Africa. Some would argue that these are the so-called frontier markets in Africa that are starting to demonstrate consistent and steady growth. Yes, there are huge centers of poverty in these countries, but the economy recovering suggests that there's a solution. There are other countries where you really ought to be doing this.
Yes, and our hope would be that these models, we think these models are stable across a number of countries. So we think contract farming could work in a country that's small like Liberia. We do think that there's a lot of stability to these models that can apply in other places, as long as there's law and order and functioning markets in the first place. That there should be a broad applicability of these models as well, whether it's low-cost vocational training that we've seen working so successfully here in South Africa, or it's sourcing from small farmers.